Hello and welcome to Big Deal. Today we have with us a special guest, Ananth Venkat, who is from Standard Chartered Bank, a banker by profession for 30 years. Ananth, you have rich experience, but why do you call yourself an investment banker by accident?
Hi, Nisha. I started my career in corporate banking. I've done relationship management, credit, project finance. And I moved to Singapore in '97 to do project and structured finance. That was with Bankers Trust. And '97 was the year of the Asian crisis. Within 3 months of my going, there was no project and structured finance. It so happened at that time that Bankers Trust had acquired Alex. Brown, a boutique US investment bank, which specialized in technology and healthcare IPOs, and they were mandated for the Infosys ADR among the three banks. And I got into the team. That's how I became a technology investment banker.
So was it lucky for you, though you didn't intend to be an investment banker, but are you happier now?
I think, every move in my career, including this one, has been really good, really fascinating. And I had a ball of a time. In fact, if I look back, I think the technology banking days, even though one went through a bubble and a burst, it was a really exciting time.
Yeah, exciting it is. In fact, it's very exciting times right now. Covering some of those deals is also very exciting for me. So I'm sure that it must be exciting for investment banking community as well. But tell me, you've seen several cycles and we've seen over the years that suddenly there's a burst of many deals and then there is a lull. In this particular phase, do you think this is a phase where a lot of deals would be cracked and we are going to see this theme building over time as well?
Look, where we are in the economy, which is now stable and growing, where we are in terms of the regulatory environment, which there have been a lot of clarifications in the regulatory environment. In terms of the private equity interest in India, that's increased dramatically. In terms of the inbound interest from multinationals looking at India as a growing market with a huge consumer base, I think these things are here to stay. And I therefore see this deal environment going only one way, which is up. Yes, there will be cycles where you'll have marginal dips, but directionally, I think we're at a very early stage. This will only grow.
So the overall deal outlook is also looking good despite the many failed deals, because the theme of this whole week has been failure of many deals. So I would say HDFC Life as well as Max Life, and that was called off. Snapdeal, Flipkart deal got called off, and there are so many murmurs of Gland Pharma as well as Fosun deal really getting stuck at regulatory hurdles. So all these put together, do you think that failure is going to really bring down or dampen the spirit on the deal street?
Not at all. Yes, there have been a lot of sort of deals which have fallen off, and they've fallen off for different reasons. The Fosun deal, principally regulatory in nature, likewise the Max deal, regulatory in nature, and there are other deals in the past which have also fallen off. But the fact is that these deals were announced in the first place implies there is a need for either consolidation or, there is a willing seller. And there needs to be a right environment, right deal to actually have the deal happen. And I've been part of deals which sort of have fallen off and actually have got done subsequently.
How? I mean, what really brings back a deal? How to revive a deal? Tell me.
I'll give you an example. One of the deals I worked on myself, this was some time back. This was the Emphasis deal. They got sold to EDS, and we were working with them quite closely. We ran a full process. We had a buyer at the end of the process. It was a sovereign wealth fund. And we were celebrating. Deal was sort of signed, term sheet signed, waiting only for one final approval from the respective the ministry overseas. At the last minute, for some reason, the ministry decided, look, that wasn't a priority. Deal fell off. Yes, we were disappointed, but we kept at it. And 6 months later, we announced a sale to EDS at a higher valuation. So that's one example, which is some time ago. But more recently, from a regulatory perspective, you had Tatas, who were looking to sell Neotel in South Africa. They wanted to expand there, decided that was not strategic, wanted to sell it. And we had found a buyer in Vodafone. That deal went to the Competition Commission there. After a long break, it got turned down. But we kept at it. And eventually, that deal closed. It got sold to a company called Liquid in South Africa. It's a function of keeping at it and then finding the right partner for a deal. So, the fact that a lot of these deals have fallen off does not mean that some of them will not get done eventually. But equally, I think it should not disappoint anybody. This is part of the M&A game.
But actually, most of all of these deals have different reasons for really falling off or hitting a roadblock at this point. But regulatory hurdles, do you think they have eased off now, or do you think they are still a big worry, a big cause of concern in any sort of deal making in India?
I would say that there has been a lot of clarifications which have been made in the deal environment. SEBI, for example, in 2015 clarified the insider trading rules. There was an issue around, can you do diligence in a public company? How do you, go about that? And, that's been clarified. So today, it can be done, and the board of directors of the target company has to, in fact, if it deems it's in the best interest of the company, can allow that. So that's been clarified by SEBI. That's a huge positive. In terms of the regulatory environment, otherwise, a number of sectors have been opened up to 100% FDI. I think there is clarification and a strong statement that we will, the tax environment is becoming more predictable, is predictable now. Those sort of things are, I think, positive for the deal environment.
So there is ease of deal making, is what
I believe so, yes.
All right. Now let's talk about some of the other themes that are in the market which have the potential of large deals and transactions really happening going forward. First, of course, is the debt-laden sectors, the debt-laden companies, and they have to perforce be resolved. Either their debt issue has to be resolved or liquidated. Do you see that there is enough interest and the land is fertile for many transactions to really fructify in this place, or it could be a futile process, which a few critics do say as well?
So yes, over leverage, or sort of the leverage issue was big, and particularly after the spate of acquisitions in 2000, sort of period of 2006 to about 2010, a lot of companies did acquire debt and are leveraged. There are two categories here, Nisha. One is the proactive sort of sales of assets, which I think have gone well. The second is the reactive phase, which is where we are today.
Right.
When you look at some of the proactive situations, and to the credit of these companies, you've had situations where JP sold its cement business to the Birlas, right? That was a good deal, right valuation. You had Reliance Cement, which got sold, and that again was at a good valuation. That was sold to Birla Corp. You've had the SR Rosneft deal, which again was on account of leverage at the holding company, but the valuation realized was a good valuation. So deals can get done. That's not closed yet, but I guess they're in the final stages. Today, what you see in the companies which are now undergoing distress sale, is it an easy sale? I think it's going to be tricky. The whole intention is to make sure the stakeholder interests are aligned. Here, the banks, the lenders are going to play the bigger role. And it's really up to them to be able to justify what haircut some of them can take and what the resultant deal structure is. It's more complex, and it's a new territory. But my view is, with the new bankruptcy law, with these things put in motion, while the first 12, 18 months may be tough going, I think it's a very good signal for, again, deal activity as well as for lenders, because their ability then to enforce security becomes much stronger.
Right. So let's talk about consolidation as well, Ananth. That has also been the theme for some time. We've seen that in telecom. We are seeing that in financial services. Quite a few situations are developing there. And one Snapdeal Flipkart was attempted but failed. So consolidation is going to continue in more sectors than these only?
Look, consolidation, I think, in consumer, in pharma, I think will absolutely continue. You will see that happening. With respect to the Flipkart transaction you mentioned just now, look, this sector globally, take a company like Amazon, which is the largest in the world, they've done more than 75 acquisitions. They bought market share, they bought unique products, and even Flipkart through Myntra bought Jabong, right, which was to become a leader in the sort of fashion space. I think that will continue. And if you look at the technology space, I'm talking about technology more than services, Microsoft has done more than 200 acquisitions. Cisco grew through acquisitions more than 180. Alphabet, they've done more than 100 acquisitions. So in this space, I think, yes, there is certainly room. Other areas, a lot of consolidation has already been done. On the steel sector, a function of what happens with these debt-laden companies, which is sort of out right now. Cement has seen consolidation, room for maybe a little bit more. And infrastructure as well, in terms of consolidation there. And there, it's a function of maybe entities buying assets which provide yield, right? Road assets and transmission assets and so on, which then can be a yield play for some of these people. Real estate as well will see consolidation. So yes, there is scope. This is domestic in nature, and frankly, the theme in 2016 has been domestic consolidation. That volume has been far higher than the international cross-border deals.
All right. So that was the theme of consolidation. Of course, you say that it will continue. We'll slip into a short breather, Ananth, but we'll draw more on your experiences in deal making, and we'll talk about the global industries group that you head for Standard Chartered, and what do you see and perceive at this point in terms of deal making. So we'll get back with Ananth. Venkat, he's right here with us, and we'll draw more from his experiences on deal making when we return on Big Deal. Stay tuned.